Hi, this is Joseph. It is Tuesday. So in this video, I'm going to do a little bit of a continuation from yesterday's video. So if you didn't see yesterday's video and you're a little bit confused about what I'm talking about here moving forward, go ahead and go to Monday's video and you'll see that. Today is the 23rd. Yesterday's video would have been on the 22nd of November. So let's start off here with the pound, and this is the same chart. You might remember here I've cleaned up everything and all the details that I had originally when I was trading with coaching students earlier so that I can walk you through the exact setup, because this is a question that I did receive, is what happened next based on where I left off from yesterday's video. If you watch that again, if you watch that video on the YouTube channel, you can see that we were right around this range right here, and I was talking about, that there's a possibility that it could form a low and perhaps break out to the upside, but that I did not have enough information at that time to determine that. And then the next likely scenario would be more of the same, which is in the downward direction, the downtrend that you can see on the daily time frame, which was obviously the next likely move. And that's exactly what we got here. So let me break it down for you. So what you're seeing here on my charts is this wave counting method. Again, if you didn't see yesterday's video, I talk about this. I talk about how I'm looking for certain turning points, and I'm also analyzing phases of consolidation by counting the waves. You can see that there was a sorry about that. Let me bring it into view. Just a recap. You can see that there was a downtrend. Here's my selling climax. Here's my automatic reaction. These 2 points right here solidify my support and resistance. And I said yesterday that I do realize at that point, when I have my support and resistance, that it's likely to print another higher high or maybe another lower low, which in fact it did. But these two levels right here are key points to me. This is how I do it. A lot of people will just simply draw at the overall high and then the overall low, and then they'll just keep moving it and moving it, these support and resistance levels, and then pretty soon they don't have accurate data. And what this is doing is this is what's forming this area of either accumulation or distribution, regardless of what it is. If it turns out to be a continued move to the downside, it's going to be an area of redistribution. And there are certain characteristics as time goes on to identify over here to the far right. So what happened after the video where I left off, and how did we trade this? And again, this is going to go hand in hand with how to improve the HL30 or the Good Morning London strategy if you're learning those. So what happened afterwards, again, price starts to, for the most part, it starts to slow down here. Volume kind of dries up towards the end of the session. This is the New York session. And then it goes into the overnight session, right? The Asian session. And very often we see price behavior like this. You can see, again, it dries up right there. The same pattern happens for the most part over and over again during that overnight session. I refer to the Asian session as the overnight session. So again, it does it again. And then here is where it starts to pick back up again. So this is about 1 hour before the London Open. We get this move right back up here. So keep an eye of what I'm going to be doing here. At this point, long before this happens, I'm drawing out my resistance level. My support level, which then becomes new resistance, right? This is from yesterday. Remember, you can go back to the video. I didn't touch it. That was that key level of support that I said was that stopping the selling climax. And then, I knew that there was going to be another support, possibly another test of support, or maybe another new low. And if I was to keep on moving it, then I wouldn't have a very accurate idea of what's going on over here with these tests of the level that it broke out to the downside. And if it's going to continue to go lower or if it's going to turn around and go back up. That's one of the key reasons why. I talk about that in my trading course, why I leave that automatic reaction high and that selling climax low in place. Again, I'm always aware of the overall high and low, but this is going to help solidify my trading opportunity. So we get a test here during the overnight session, and then we get a test on the first, this is the 30-minute bar. So the first hour prior to the London Open, and then here's where it stops and turns around right here. And you can see volume levels stop right, or start to pick up back up again. So what I'm going to do here is what I did when all of this set up. So I'm looking for certain candles or certain bars that have an unusual amount of activity. The range from the high to the low is quite large based on the previous candles, and you can see that volume stepping back in. That should be expected when you get towards the start of one particular trading session that has more activity. And then I'm also going to be looking at, for example, a level like this one or a level like this one, and I want to be paying attention to certain characteristics, right? Obviously, this bullish move right here, an hour before, did not take out any of these other levels. It didn't close above those levels. And you can see, I want to see the behavior. I want to see the relation of the high and the low, the range of that bar, and then also volume levels. So at this point, again, everything's okay. There's no reason for me to go long just yet. So I'm starting to see that an area of resistance is forming here, which is the previous support low. And then I start looking for an opportunity to sell it. So if I was looking for an opportunity to sell it, let me show you what it actually looked like. And it turned into a Good Morning London strategy. So let me bring my MetaTrader platform into view. This is the MetaTrader platform. And here you can see the Good Morning London strategy. So when I talk about the Good Morning London strategy or the HL30, I say that sometimes there are higher risk trades than others. And you need to learn how to identify the environment or the conditions. Are they appropriate? Well, this is the environment. This is the trading environment. These are the conditions. We've broken below a key level of support, yesterday's low. It was a specific level of consolidation, and we still needed more information to determine if it was accumulation or distribution, or redistribution in this case. And then you can see the multiple tests, and then I've got confirmation with volume. Volume gives me more confirmation than just simply looking at an indicator. So over here you can see that I've got the CCI indicator, but I don't use any indicators when I'm trading the Good Morning London strategy anyway. So the Good Morning London strategy, let me go ahead and get my crosshairs in here. This is the start of, or the first 30-minute bar at the London Open, which is right here. It's where I'm moving my cursor. It's the second red candle. Now it also happens to form something that looks like an evening star pattern here, bouncing into and running into this level of resistance. Now you can see that I don't have that level of resistance in here, which is really that support level from that consolidation phase. I don't have it in here. All I have here is yesterday's low. So it's easy to miss some of these points if you're not aware of the trading environment, the conditions, the background, everything that's setting this whole thing up. Again, let me go ahead and compress this so you can see where we're coming from. We've got this downswing with stopping action, automatic reaction. There's my resistance. There's my support. Now I'm also counting the waves as this is happening. Counting the waves means that I'm recording the amount of volume in these contracts traded here. This is actually pound futures. I'm recording the amount of activity here within these significant waves. So we've got a wave here with these three red bars here, one slight pullback, and then I've got more of the same on the way down here. So this is going to give me more confirmation on the way down. So the way I traded this here is then looking for the Good Morning London strategy. Again, the Good Morning London strategy is a break of the first 30-minute bar at the London Open, which is right here. And I get in 1 pip below the low of that 30-minute bar. That gave me an entry at 1.3373. I use a 20 pip target. The 20 pip target is 53. You can see it went a little bit lower, but it was a relatively safe trade. It wasn't a big move. It wasn't more to the downside where it dropped another 150 pips. That's not the trading environment we're in right now. So you can see that with all of this confirmation, I had 100% certainty when I get into this trade. This also puts you in a position where if you're used to trading full, let's say full lot size, but you've experienced, let's say, a string of losing trades, 3, 4, 5 losing trades, and now you're afraid. So you start cutting back on your lot size. When you cut back on your lot size, because you don't know if you're actually trading the right trade, you don't trust yourself anymore. I've been there. I remember doing that when I first started trading. This is what you need to learn is some people will refer to it as market structure or price structure. I refer to it as the price movement mechanism. It is the cause that's behind all of the price movement that you see. Something is taking place here and you need to understand it at a very deep level. Doesn't take very long to understand it, but once you understand this concept, it's going to make trading just like this a lot easier so that when you do get into a trade, you can put 100% certainty into that trade and you can put on your full lot size, whatever it is that you're accustomed to or you're prepared to trade. And you're not going to hesitate. You're not trading in fear any longer. You understand the mechanics of what's going on here. You understand the supply and demand signature that you see here with volume. I'm not using an indicator here. CCI indicator is on this chart for the HL30 trade. We didn't get an HL30 trade on the pound dollar today. I only got a Good Morning London trade. I did, however, have an HL30 on the dollar Swiss, and I had an HL30 on the euro dollar. I'll make another video on those. And they both hit their 20 pip targets today. So hopefully this gives you some clarity as to what I'm doing. And I teach you how to do this in my trading course. It is relatively easy once you understand it. but it does take some time to understand it. And it takes all of those 618 levels that you use, or those candlestick patterns that you use, or those little trend line breaks. It takes those trades up to a totally different level. It means that you'll be executing those trades when you know that they will work, not just guessing and hoping that they will work and using those strategies in the wrong location. That's one of the biggest challenges, and I pointed that out yesterday in yesterday's video, is that inside of these consolidation phases, well, I can see a bullish engulfing candle right here, and it's possible that could have been a 618 bounce, and somebody would have traded it. I used to do the same thing. I used to make the same mistakes, and then ultimately they don't go anywhere, and then they just roll over and you get stopped out because you're trading it at the wrong location, because you don't understand this structure. You need to understand this price movement mechanism, which is this structure here, supply and demand, the accumulation, and the phases of this consolidation, so that you can get in at the right locations and trade it correctly with 100% certainty every time you execute a trade. Thanks for watching.